Welcome to The Explainer. Today, we're diving into the mind of a true legend, Ray Dalio. We're going to break down his core ideas about money, wealth, and the massive forces shaping our world, all based on a really deep conversation he recently had with Nikhil Kamath.
You know, everyone's story has to start somewhere. For Ray Dalio, it all began when he was just 12 years old, working as a golf caddy. He took $50 he'd saved and bought the only stock he'd ever heard of that cost less than $5 a share. And then, by pure dumb luck, the company got bought out and his tiny investment tripled. He'll be the first to tell you it wasn't skill, but man, that feeling of winning, it got him hooked for life.
All right, so here's our game plan. We'll kick off with that origin story. Then we'll tackle his really mind-bending idea about the illusion of wealth. After that, we'll get into his famous all-weather investment strategy, decode the 5 huge forces he says are changing everything, and wrap it all up with his direct advice for you.
So, let's dig in. How does a kid from a lower middle-class family, the son of a jazz musician, become one of the most important financial thinkers on the planet? It goes way beyond that one lucky trade.
So that early win lit a spark, for sure. But the real light bulb moment, the thing that changed everything for him, came in 1971. Dalio was 22, working on the floor of the New York Stock Exchange. Then, on August 15th, President Nixon went on TV and announced that the US dollar would no longer be backed by gold. And right there, it hit him. Money wasn't this solid, real thing. It was just a promise. And promises, well, they can be broken. That one single event became the foundation for how he thinks about risk, and it led him to start Bridgewater just a few years later.
And that huge realization, that money is just a promise, it leads directly to his most powerful, and maybe his most unsettling idea, what he calls the illusion of wealth.
I mean, it sounds like a pretty simple question, right? But Dalio argues that almost everybody gets this completely wrong. We look at a big stock portfolio or a startup with $1 billion valuation and we think, wow, that's a lot of wealth. But according to him, we're totally missing the point.
Okay, so here's how Dalio breaks it down. It's actually super simple. Money is what you use to buy stuff. You hand it over, the transaction is settled, deal's done. But wealth, things like stocks, bonds, real estate, that's not spendable. It's a claim on money. It's a piece of paper that says you have a right to get money in the future if you can find someone to buy it from you. And this is where things get a little alarming. Dalio's done the math, and right now in the US, there's over 8 times more paper wealth out there than actual money to cash it in. Now, that's not just a big number. It's a ratio we've only seen at the very peak of the biggest financial bubbles in history, 1929, right before the Great Depression, and 2000, right before the dot-com crash. Yikes. And this is the absolute core of his argument. A bubble pops when too many people try to cash in their wealth for real money all at the same time. It's like a game of musical chairs. Everyone rushes to sell, and they suddenly discover there aren't enough buyers with actual cash. And just like that, the illusion of wealth disappears.
Okay, so if the whole system has this big vulnerability built into it, how does Dalio think a regular person should invest? How do you build a portfolio that can actually survive a storm?
Well, for most people, his advice starts with something you've heard before. Have a well-diversified portfolio of things like stocks and bonds. Nothing crazy there. But here's the Dalio twist. He insists you should hold between 5 and 15% of your portfolio in what he calls alternative money. And for him, that really means one thing in particular: gold.
So why gold? What's the big deal? Well, think about it like this. Pretty much every other financial asset you can own, a stock, a bond, even cash in your bank account, is somebody else's liability. It's their IOU to you. Gold is the only one that isn't. It's not somebody else's promise. You can't just print more of it. And that makes it an amazing diversifier that tends to do really well when everything else is falling apart. So, of course, you're probably thinking, what about Bitcoin? Isn't that digital gold? Well, Dalio owns a little bit, but he sees some huge problems with it. Bitcoin transactions can be tracked, and governments can interfere with them. It could be vulnerable to being cracked. Gold, on the other hand, is a physical, anonymous thing that's been used as money for thousands of years. It's just a lot harder for anyone to control.
So let's zoom out. How does all this fit into the bigger picture? Dalio says if you really want to understand the markets, you have to look at the huge cyclical forces that have been shaping human history forever. He boils everything down to these 5 forces. Think of them as giant waves that are always moving. You've got the debt and money cycle, which creates booms and busts. You've got internal politics, which is the fight for wealth and power inside a country. Then there's geopolitics, which is the rise and fall of great powers. And then you have the wild cards, acts of nature, and of course, technology. He says history basically just repeats because these cycles are always at play.
And here is his critical warning for us, right now. For the first time in generations, those first three forces are all peaking at the exact same time. We have huge amounts of debt, we have extreme political division inside countries, and we have rising conflict between major world powers. Dalio calls this a perfect storm. Most of us don't see it because these cycles are longer than our lifetimes. But if you look at history, this kind of convergence is a flashing red light for a massive global change.
Okay, so when you're facing down these massive, world-changing forces, what's his simple, direct advice for a young, ambitious person today who's just trying to make their way in the world?
You know, his advice isn't some complicated formula. It's incredibly simple. Play the game. Stop just thinking about it or reading about it. Just get in there. Whether it's investing your first $50 or starting a tiny business or learning to code, you have to get in the arena. Real learning, he says, happens when you have some skin in the game.
He basically lays out this four-part path. It starts with action. Play the game. But you have to pair that with knowing yourself so you can pick the right game for you. Then you fuel all of that with curiosity, always asking why, and you speed the whole process up by surrounding yourself with people who've already mastered it.
And when he's asked, where should a young person put their first $100? His answer isn't a stock or crypto or anything like that. It's simple. Invest in yourself. Invest in whatever helps you learn and grow, because that education, that experience, that's going to give you a way better return than any financial asset ever will.
Ultimately, Dalio's message is really one of empowerment. The principles are out there, the history is there to learn from, and the game is open to anyone who's willing to get in and play. So the only real question left is the one he leaves for us. You're in the game now. What's your next move?